All right, what's up, guys? Hello. Back with another live stream. So I'm just gonna get some stuff sorted out. It's been a while since I've done one of these, so I'm a bit what's the word? Forgotten how to use all this stuff. So I'm here now. We're here. All right. Yo guys, it's Any aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list, my Discord chat room, and my ebook about which trading platform to choose. Now I've got all the plug-in my stuff out of the way. Let's get straight into some technical analysis breakdown. That's been a while. It's been a while, guys. I know I had a big hiatus from doing these, but there's no real excuse, to be honest. But yeah, it's just been a bit of a hiatus. So now we're back. I'm gonna try and do these things more frequently. So before I get started, just drop a message in the comment section or the live chat section, just to let me know who's there. Let me know that I'm not just speaking to myself, just even if it's just a hi or whatever. Just drop me something just to let me know there's some people out there. And if there's any stocks you want me to cover, just put them up in the chat, the ticker symbol, and I'll see if I can cover them. But before we get into the technical analysis, I wanted to actually look at a couple of things that are sort of interest. Now I saw this another YouTuber had this video up about this thing called the AAI. So it's the American Associations of Individual Investors. So as opposed to like institutional investors, this is all about I think it's just the institution of lots of retail investors. And there's this thing called the AAI sentiment survey, and it checks out whether a lot of these retail individual investors are bullish or bearish. Now, this YouTuber, what he said was that, and this is what I kind of agree with as well, is that obviously retail investors are called dumb money for a reason, because a lot of the times they lose money. And so he uses this as like a sentiment to see where the market's going. So wherever he thinks the retail investors are direction that they're going, he goes the opposite way, because as we all know, about 90% of retail traders and investors lose money. Well, retail traders lose money. Hey Adil, how you doing? So with that being said, so what he did was that he started saying, okay, so for this week coming, most of these retail investors are quite bearish, which means that most likely it will be bullish. Now obviously this isn't a foolproof strategy, but it's just something to take into consideration, as a lot of the time retail investors are called dumb money for a reason, and institutional investors and traders are called smart money for a reason. So whatever the retail investors en masse, whatever the herd says from a retail perspective is normally the opposite. So that means there's probably going to be more bullish momentum, which is good for me, because I actually have a trade on that I believe is going to mean that's a bullish trade, and I'll tell you about that in a second. So what's up, Ade? How you doing? So just want to take a look at the a snapshot of the roadmap first. I mean the heat map. So over the last week, most of the major indices ended off slightly red. They had a good bullish move after the and the non-farm payroll, but I think they lost a lot of their gains on Friday. But it's marginally down, like 0.5%, 0.4%, not too far down, but it's in the red. And the VIX is up. And as we all know, the VIX is called the fear index because it's inversely correlated to the market. So whenever the VIX is green, most of the markets are down, and whenever the markets are down, the VIX is in. Whenever the VIX is green, the markets are down. Whenever the market's bullish, the VIX is in the red. As we all know, because VIX is an indicator that is an amalgamation of options trade in volume. So it's always good to look at what the VIX is doing. So the VIX is up, market's down, as we said before. So I'm going to go over to economic calendars for the next week, and as we can see here, I only look at the high ones because they're the ones that are of interest for the most part. Or the mediums or lows, a lot of times things that are negligible to actually trade in, they won't actually make a real effect. And the only major thing seems to be here is Australian RBI cash rates decision. I don't think that's even that important, because if it's estimated to be stay the same, then I don't know how much of an effect that'll have on the markets. We've got the US jobless claims. Once again, yeah, I think this will have some effect, so I've put an alert on that. But I think a lot of these jobless information now has been baked into the market for the most part. I don't know how much effect it will have on the market, but I've highlighted anyway to give me an alert. And we just got some more information from the US. I don't think this information here is that important. I want to keep an eye on it anyway, but I don't think it will affect my trading, because we had the NFP last week, and that's one of the major ones that really has an effect. Some of these ones are a bit lesser versions of that. All right, so let's get into some of the charts now. I'm going to start with the DAX. No, actually, let me start with the Australian dollar, because that's the first market that's going to be opening. So with the Australian dollar, straight away, I think that, yeah, so with the Australian dollar, what I think is going to happen is that I'm on the 4-hour chart right now. To be honest, I've got a bullish bias for most of the indices for the next week or so, and this is mostly because of what I see happening in the DAX, and I think all the others will follow. So for the most part, I'm going to be saying the same thing for most of the indices, but the charts are going to slightly differ. So for the Australian dollar, what I see here is that I saw like a support line here at 6018. So I drew a line here, and I believe that right now the next step for the Australian dollar is that it's going to start climbing, because as we all know, old supports become new resistances. So hey, what's up, Ewan? Oh yeah, you like the fresh lid? No more hobo style. Finally shaved. Yeah, I was looking a bit rough. Yeah, cheers, man. So it broke out of this kind of resistance, climbed up, sold off, and now it's kissed the old resistance as a new support. And guess what's going to happen next? Exactly, Jonathan. Start climbing. And this is a good place to take a long, because at the end of the day, if you take a long here, all you need to do is really set your stop loss really short here. So it's small, it's like really tight stop loss, so it's a very small risk for a good reward. I'd set my stop loss maybe 70 pips just to give it a little bit of room to breathe, and then you can just see it climbing. The only problem with this is that you kind of don't know where your take profit would be. But what my rule of thumb with something like this is that I would normally whatever this distance is, I'd kind of make that where my take profit is. So I'd see it climbing, and I'd copy this and move that here, so that my take profit zone would be around here, something like that. So I just use this distance as a marker to see where the take profit is, but it's kind of hard to really tell where the take profit is, because it could just keep climbing for God knows how long. But that's where I'd say my take profit is, or I'd maybe move my stop loss up there, and then if it retraces back, then that's what happens. But I would have made a profit already. So that's the plan for the ASX, which is Australian 200 index. Now moving on, I'm going to move on to the DAX. Now the DAX, guys. Now the DAX, I've got actually a trade on the DAX that I want to show you guys. Very interesting trade. This one I'm going to move this here. I'll get rid of that. Yeah, so bullish. Matt, you're saying we're bullish. I agree with you, but I'm going to explain myself now. I'm going to explain why I think we're bullish. I'm going to move you guys here. So for the DAX, so this is what I realized after the fact, and this is something like I made quite a bit of money on the DAX, and some of the guys in the group will realize, but I think I left a lot on the table, but I only realized the pattern later on in the day. So the DAX, there's a lot going on. So there was this line I realized here. I realized there was two specific lines that were of importance. This one, let me color code it. This one here and this one. Now I knew that once it broke out of this line, it would retrace back down to it and then break out, kind of like what I said before. Old resistances become new supports, old supports become new resistances. So once DAX broke out of here, it retraced back down and then it climbed up again. And what I used what I realized as well was that the Fibonacci was being respected a lot in the DAX, because as you can see here, if I draw a Fibonacci from here, I think it was to here, look at that straight away, it hit this was a point. What's going on? This was a point of confluence. So this is a resistance line, this is a Fibonacci level, and this is also like where it kind of retraced back to, and same thing happened here again. So can you see that? So this was a key point to take profits, you sell off, and then take another entry to go long. Now what I also realized with the DAX, this was the real killer, this is the one where you can make the real big bucks now with DAX, was that we were actually in a ascending inverted head and shoulders. So if I go down to like let's say, let me go down to the 2 hour chart. Yes, so here is an inverted head and shoulders. Now if you know about inverted head and shoulders, I'm gonna actually search it, because once you know how inverted head and shoulders act, you know how to really profit from it. Once the inverted head and shoulders breaks out the neckline, it's gonna climb, and it's gonna climb to the previous, near the same level as its previous highs that it dropped into, and it's gonna sell off. So I actually made money off of the climb here, and I also made money off the sell off, because I knew it was gonna sell off. And I actually called that out on Twitter. That it was going to sell off, because once you kind of understand how the technical analysis goes, and you understand how certain patterns move, it's easy to call out different trades. So like on Friday I called out, I said, okay, this is when it was still at the top, I said it's going to retrace back down. Now I kind of undersold it, because I said it's going to retrace down to like the 12,500, but it doesn't matter. I took a short and I made quite a lot of money off of that, because I realized that it double topped here and it was going to sell off. And that's exactly what it did. It double top, sold off to that 12,500 area, and then started climbing. And that's exactly what I said it was going to do. And the only reason why I knew that is because if you Google Head and Shoulders, now I know this just off of I'm not talking about the shampoo, by the way, but I know this just off of seeing these patterns so often that I knew how they was going to behave. If you Google Head and Shoulders pattern, now I'm going to Google it and I'll show you what I mean. So what I did was that I with the Head and Shoulders, yeah, let me show you inverted Head and Shoulders. This is what I meant. Sorry, my computer's a bit slow. I think it's because of the stream. So yeah, with inverted Head and Shoulders, this is what I'm talking about. With the inverted Head and Shoulders, come on, speed up. Oh my days. Okay, so with the inverted Head and Shoulders, what happens is that this is the shoulder, this is the head, this is the shoulder, neckline. Once it breaks out the neckline, it will come up, it will retrace back down to the neckline, kiss it, and then start climbing. And that's exactly what I'll see this happening this week. So it's now kissed the neckline, or near about. It didn't actually kiss the neckline because it's the neckline here, but it got close enough. It's never going to do it like for like. No, I'm not talking about the shampoo. Yeah, it's not talking about like for like, but it kissed the neckline. So the next move is for it to climb up, and that's why I've taken a if you saw my options trade video, my first option trade went really badly, but I taken an option trade to go long on the DAX, and my option trade is that I got a call for it to be above 12950, because I believe DAX is going to climb past 13,000 because of this pattern. I can see inverted Head and Shoulders, climbs, kisses the neckline, and then shoots up some more, and I believe it's going to climb all the way up to about 13,000. And so that's why I took a call option. So this call option is 2.5 pips, so that means right now I'm down £35, but it's all right, because as long as the DAX climbs and gets close to 13,000, because I've got it at 12,950, I'm going to make a bit of money off of that. So I'll let you guys know how it goes. Remember, if you watch my old video, my last options trade didn't go that well, but I think I'm pretty confident in this. There's another reason why I'm confident in this as well, is because when you look at the DAX options trading, so this website shows you how many the options interest in the DAX. When you look at the DAX options interest, you can see that Let me show you. You can see that there's a lot. This must be institutional, and this must be institutional. There's a lot of volume. It might be, or it's just someone with a lot of money, but there's lots of institutional call options at around the 13,000 mark. And a lot of these, as I said, institutional traders, they're not always right, but a lot of times they're more right than us retail traders are, because they got way more information and they're just way better at this trading stuff than we are as retail traders. But there's a lot of institutional there's a big amount of call options at the 13,000 mark, and there's another one at 12,550. We've already broken that one, so I believe that there's going to be a lot of bullish momentum to try and push it to 13,000, so that these guys can exit their trade in a profit. A lot of manipulation goes on, especially at institutional level, when they have a call option that they want to get reached so that they can take out profits. No, hey Jonathan, no, I don't use bots actually. I actually do want to test out this pro real time algo though that one guy messaged me about. So I might test out this algo and maybe make a video about it, because there's a couple companies that do that create algos that specifically can be plugged into pro real time. So I want to see how they work, just so I can document it for the YouTube channel. But no, I don't use trading bots at the moment. Just straight up eyeball technical analysis. So that's why I think it's going to go to 13,000. There's a couple of things that make me think that the open interest for the options, just the chart pattern, and then also the fact that Dow Jones as well. Dow Jones, I think, is also going to be bullish. I think they're all going to be bullish really for the next week, and Dow Jones especially, because obviously they had Friday off, so I believe that they're going to be doing a lot of catch up this week, because some of the other charts were, even though Friday was a sell-off day, I think Dow Jones is going to do a lot of catch up now, because it was lingering quite a lot. What am I doing? DJI. Yeah, and it's the same thing with Dow Jones. Obviously it's a bit messy here, but this was all kind of, remember, Thursday was treated like Friday because they had the NFP and it shot up, but then it kind of just started acting silly after the fact. And you have to take into consideration that Friday they had off as a bank holiday, so there's no market activity there. But once again, there's this resistance line here on the Dow Jones that needed to be respected. And once it broke out, it would have done the same thing the DAX done, in my opinion. I believe it would have done that. I believe it would have climbed up, retraced back down, do what the yellow line did, but it didn't do that. So I'm just going to delete this one because I don't really think it's bearish. But I believe it's gonna play catch up and start climbing again. I don't know where this one's going to go. I think it's going to go, I don't know, maybe to around this area here, maybe, but I don't know. But like I said, I think all the major indices are bullish right now. Footsie. First of all, I don't really try to trade Footsie because Footsie is a bit of a joke right now. It doesn't really do much and it's a bit temperamental. We all know that the UK market is just a bit in a bit of a limbo because of Brexit as well, but also because we're heavily weighted towards energy stocks and finance, energy sector and finance sector, and they're some of the worst performing sectors right now. And that's why the FTSE never really manages to really keep up with the other major indices in the way that it moves when there's big rallies. The FTSE is a bit lethargic and doesn't really do much. Right now I see like a triangle pattern forming. So I believe what I think is going to happen is that two things could happen. It could sell off here and kiss this again before retesting this top, or it could break out here, but I doubt that it's going to do that, because if it does that, then it'll be pretty much breaking correlation with all the other indices. So while all the other indices are quite bullish in my opinion, I doubt it will break rank and go and sell off unless something major happens. So I can see it selling off, retesting this resistance, this support here, and then climbing up and then retesting this resistance line here. So that's how I'd play it. If it got to here, I'd probably take a long and then just ride it up to the top. Yeah, Ewan. Yeah, but this options position is like it's for July, so yeah, there's no stop losses in option. It is risky. I'm not gonna lie, it's a risky business. I'm pretty confident in this. I sized up. I had put 2.5 pips on it. You just have to monitor it. That's what it is. And what I do is that with the options position, I set stop losses on the real chart, because when you click on options, it gives you like a separate chart that just kind of doesn't make sense. So what I do is that I just stick to I put stop losses. I put not stop losses, I put alerts on the real chart. So when it hits a level in which I think, so like for example, I'm expecting this right now to carry on climbing. If for example the DAX just starts doing something silly and starts like selling off, I've put like a, if it breaks this neckline, if it breaks this line here, so let me show you, if it breaks this line here, if it breaks, yeah, let me make it another color because I've got too many bold. If it breaks this red line here, then I would have thought, okay, the pattern's been broken. So at that point, I would exit my trade. So what I'd do is that I'd put a stop loss. Let me do that now. So put an alert on this line. And I'll do the same on my phone, on IG. And if it does hit that line and breaks through it, then I will just exit my, manually exit my options trade. But yeah, that's the one thing about options trading. You can't set stop loss, so you have to just make sure that you're on the ball. Otherwise, you could just look at your phone and realize that you're down quite a lot. But yeah, I do think though, because this didn't fully retest the support, the line here, the neckline, there is a chance, right? Let me delete this. There is a chance that what could happen is that come market open later, it will start selling off again, actually touch this line and then climb. But then this is the pivotal area. If it carries on going up, then it'll go up. That's fine. This one I can delete because that didn't happen. It can either go up from here or it can go back down again, kiss that line and then climb up. But this is the point at which decisions are made. If it kisses that line and then goes through, I'm closing out my position because that means that the pattern has been broken. So that's how I'm playing it. It's all predicated on this alert being triggered. I'll make a decision off the back of that and then I'll manually exit a trade if I have to. So do you guys have any charts that you want me to look at quickly? Because I've just looked at some of the major indices. I looked at DAX, Footsie for a bit, looked at Dow Jones. Let me look at NASDAQ. Actually, I'm going to try something different. I'm going to look at a crypto. Not a crypto. What do you call it? A Forex for 1 second. I've started to look at Forexes a little bit more just to see if I can start trading them. I'm trying to dip my toe into it, but I'm being very cautious because I haven't actually made a trade yet. So the first one I've been looking at is Euro US dollar, and this is purely technical analysis. I haven't looked into any economic stuff that might be aligned to it. I'm just going to try and go off purely on technicals, but obviously I can see this resistance line here. That's very obvious to see, and I think it's going to go back up and retest it just based off of the way it's behaving and the basis for the shape of the pattern. Now if I dig a little bit deeper and go down into the 1 hour chart, what I can see here is I'd probably plot a line like maybe like here. Yeah, can you see this? This is potentially, yeah, okay, I'll do S&P 500 in seconds. Yeah, so this is potentially like a kind of like a support line. It's a weak support line, but I'm going to make it dotted because it's not like properly, because it's been broken a couple of times. But you can see that there is some sort of significance to that line here because it's been tested a couple of times, broken through a couple of times, been tested. So I would say that a nice little trade would be potentially go long up to there, but I'd want to see a breakout, and then you know the deal, all of that stuff. But that's how I'd play that one. And if you look at the MACD and RSI, go to the higher time frame, 4 hour time frame, you can see that the MACD looks like it wants to climb up. Look at it, see it's curving on the 4 hour and climbing up. Gold, I used to trade gold ETFs, not gold itself, but I used to look at gold and do some technical analysis on gold so I could trade the ETFs. So yeah, I think this is Euro US dollar is gonna be maybe a bullish move. Let's retest that line and then potentially break out. If it doesn't break out, then it's gonna sell off. But the 180-day simple moving average is underneath it and it's climbing and it's acting as a support. So that gives me some sort of hope that it's gonna break out to the upside. So I want to draw some lines here and then keep those lines there here and see how they play out. So right now I believe that's going to happen. Potential scenario is that rejection, but I don't really see that being likely. SP, oh, what's it? Oh, let me just do it from here. Sorry, my phone's going off. Sorry guys about that. Sorry guys about that. My phone's going off. All right. Yeah, so where's the S&P 500? S&P 500, same again, same story guys, same story, bullish. for the same reasons I said all the other indices, bullish. The shape, let me go on the 4-hour chart. I'll do gold next, Euron. So 4-hour chart, obviously these are some key levels that I've clocked out here. It's kind of that same, yeah, kind of that same in terms of, it's a bit more messy here though. Okay, so it looks a bit more messy in terms of technical analysis, like trying to draw plot lines on it, but I believe it's bullish, but there's not really any sexy lines I can draw on it right now. But I still believe it's bullish. I believe all of them are bullish. Sorry, I didn't really give much good technical analysis, but I do believe it's bullish. Watch how the DAX behaves. Watch how the ASX behaves. Once it hits like 10, 30, 11, I want to look at the ASX to potentially take that trade anyway. See if I can take that long trade here, because it looks like a good trade to take. So I would probably take that long and set a stop loss just below here. So that's something I'm looking to take. What else? Finally, I'm gonna look at gold. That's it. Gold. That's from Gold Member. If you guys watch Gold Member. Yeah. So gold on the 4-hour chart. It's just looking kind of messy right now. That's the thing with gold. I remember I set this line here because this was a resistance. Yeah, gold's looking kind of messy, but do you know what it's doing? Do you know what it's doing? If you look at the daily chart on gold, I haven't really got any strong opinions of it one way or the other. The only reason why I'd say it'd probably be a little bit bearish is just because I said everything else is bullish, and you know gold's inversely correlated to the equities market, but that's not a good enough reason to take a bearish trade on it. I don't really like how it's moving right now. There's not really much technical analysis for me to do because it's kind of just been, look at that. This is the worst thing for a technical analyst to see, because there's no lines to plot on it. So as I'm looking at gold right now, it's not the sexiest graph for me to try and plot lines on, because it's just moving a bit like it's a bit higgy-hagger. It's just not really doing much. Let me make it bigger. So let me see if there's something I'm missing. Initially I thought this, okay, so this is, if I'm really clutching at straws, do you know what I see here? This is really clutching at straws here. This was kind of like an ascending wedge, kind of, right? This is kind of like an ascending wedge, right? So this is my theory. This could potentially be my theory. With an ascending wedge, if you guys know what ascending wedges do, it's when, I'll show you ascending wedge. This is what ascending wedge does. So for gold, if I'm really pushing it, so this could potentially happen. I'm going to draw this and let me know what you guys think of it. This is an ascending wedge, yeah? I'll show you. This is an ascending wedge. It's that. So then it will go like that, and then it will eventually break out, retest, and then sell off. So it kind of looks like that, minus this area obviously, but it kind of looks like it's been ricocheting in this kind of zone, broke out to the downside, and then it's retested the old resistance as in its old support as a new resistance. So potentially the next move would be to the downside, just based off of the fact that it looks like an ascending wedge pattern. So that's kind of that's the only way I would look at gold right now, as a medium term short. But it's I wouldn't be my most comfortable trade, just because I'm looking at smoother chart patterns that I can take elsewhere. But that's how I would play it personally. If I was trading gold, I'd because it looks like it's come to the old support, and then what I'd do is that I'd take a short here, and then potentially maybe set my stop loss like here. That's how I play it. And yeah, so this is what I'm talking about here with the ascending wedge chart pattern. So it's kind of like okay, see here. What a lot of these books don't do is that they don't tell you that it retraces back and it retraces back to the old support. It'll come back up. So a lot of times they make it look like it's just going to sell off completely, but it doesn't do that. Normally it will sell off, come back and hit the old support as new resistance, then sell off. So that's what you need to look out for, the retracement. So that's why I always draw it like this. I always draw it, they always fail to tell you that it's going to come back up. They always just going to draw it coming down. So that's something good to know, because then you won't feel like the pattern's been broken. How I would play a ascending wedge is that I would take a short here. Do I trade US dollar? No, I don't. Do you want me to look at it? What's the ticker symbol for US dollar again? Yeah. Okay, I'll look at that. But yeah, before I go into that, comes down. What I'll do is that I take a short here, get it down to here, maybe exit my position, wait for it to bounce back, and then take a short here as well. And then I set my stop loss just above it, and then let it ride down, and then just keep moving my stop loss down. So that's how I'd play that one. And last but not least, US dollar, because you asked for it, Matt. I don't trade it, but I can look at it, and it says no data. Okay, cool. So US dollar. Let me just make sure I picked the right one. DXY. I think I got the right one. I think this is it. Anyway, is this it? Yeah, I think so. This is the first time I'm looking at it, so forgive me, because I'm going to be drawing lines in it on the whim right now. So I see that straight away. I see that. Okay, so I see those two straight away. What else? So that's what I see right now. I like to draw these little arrows just from, I don't know why, I just like to do it. So, okay, so this is how I play it. So look at this. The 180-day simple moving average is curving down, so it looks like there's downward pressure. So what this looks to me is like, it looks to me like a bear flag. It looks like it's going up, down, ricocheting, and it's going to sell off some more. So, but we can't assume, so we map out every scenario. So what I see right now is that the 180-day simple moving average acting as a bit like a resistance. So I think price would probably retest this line, and then it'll make a decision. This is a pivotal point to make a decision. This dictates what happens next. So what I'd do is that it would retest that line, and then it'll either come back up and test there, or break out and then retrace and then sell off, as per usual. You know, one trick pony, that's all I ever say. But well, it'll just do that. I might do that, or I might just do go up and come down again. It might have one more rally in it, and then it might make a decision. So there's a couple of things it could do. It could bounce off here, come up, retest that, and sell off. It might come here, sell off, come up, but we don't need to think that far ahead. So I'm going to delete these lines, because that doesn't matter. These don't matter right now. Or if you're trying to make money, you don't really need to worry about the further steps. All you need to worry about is what's happening in the next immediate steps. So what I'd do is that wait for this, and when you get confirmation of whether you think it's going up or going down, take your position and set your stop loss. So if you think it's going up, set your stop loss just below this support, and then let it ride up, and then take your profit here. If you see it selling off, wait for it to sell off, maybe either take half a position and short it, or let it come down, let it come back and retrace, and then take your short here, because this will be the confirmation of a sell-off. When it sells off, comes back up and sells back down. Let me give you an example of that. Like with the DAX short that I took the other day, it was a great, on Friday, it was a great short because I waited, I was patient. What I did was that, if you go down to that, the 15-minute chart, I was very patient. I saw that, I thought DAX had double topped here, and I thought, okay, it's gonna sell off. And I told you, I remember I put in my Twitter, I said this was before the market, before the day I'd even come. I said it was gonna retrace back down to the 12,500 mark. So let me show you that tweet again. This is it, the tweet that I said it was gonna retrace back down. I said that was that the morning. I said it was going to retrace back. So see, 10 a.m. on July the 3rd, I said upside bias, two potential scenarios, bounce off 12,600 or 12,500. So I mapped out the two scenarios. So I knew going into the day what I wanted to get out of that trade. So then when it broke this resistance, I actually took the short, closed out my short here, and then we'll let it ride back up, and then took my second short, and then let it trace all the way down to 12,500, as I 12,500, and that's exactly where it reversed. See, so I mapped out my day, knew what I was gonna do, and when it played out, I knew what to do. I wasn't like scared or anything because I'd already planned it in that morning what was gonna happen. So it sold off. So I remember I made that I wrote that tweet at 10 o'clock. By 10:45, it broke support, sold off, took a short, came back up, took my second short, came back down to 12,500, closed out, done for the day. So that's what I did. See, so that's why you map out your process beforehand, so that when the day comes and you know what to do, you know how to play out each trade. But I hope you guys found that useful. Follow me on Twitter because I tweet about all my trades that I'm going to do a lot of the time before either the day of, in the morning of, or the night before. And follow me on youtube.com/the Noctrader if you don't follow me already. Guys, it's Any, aka the Noctrader, signing out.